What's up guys? Ryan here again. Today I want to talk to you guys about the basics of building your credit score. A lot of people that come to me, a lot of my clients that come to me start asking me about credit scores and applying for credit and stuff like that because a big budget of your startup is going to go towards marketing. So sometimes we get into the problems of companies and people not having enough money in their budget for marketing. So the biggest thing is that people have to apply for credit. And I know there's some people out there that say don't apply for credit when you start a business, and there's a big bunch of people that say do apply for credit when you start a business. And I'm part of these people. You know, if you're going in, you're going to go all into your business. At least that's my look to it. Applying for credit doesn't have to be scary or hard. You just need to know your basics about it before you go and do it. You know, if you know that you have terrible credit, then don't waste your time going to the bank and asking for credit, because you probably already know the answer. If you have terrible credit, they're going to probably say no, especially if you don't have a house or any other assets. But on the other hand, that kind of gives you time, and you have to put thought into building that credit back up so that you can start getting money. You know, credit, I think people get caught up with a little too much. I don't think it's as important as a lot of people say it is. Now, don't get me wrong, I'm not saying that it's not important at all, but you know, I think a lot of people are just a little too scared about it. But let's get to the basics. I want to show you guys, and these are things that I have done myself. As you know, I am a young entrepreneur. I started my first business at 18, and over the years I've had to take out money from the banks and such, and I've had to keep it under control. And I'm talking about my credit. So these are things that I've personally learned. I didn't go to school. I'm not, you know, anything like that. These are just things that worked for me that I want to share with you. So let's start with what you do not do if you want to keep your credit score good. So number one is don't miss credit card payments. That's going to be a big thing. That's going to go right to your credit score if you miss credit card payments. Not a good thing, and especially if you get into overdraft. Second thing would be missing your cell phone payment. A lot of people are like, it's only an $80 charge a month. Missing my cell phone payment's not going to do anything. And then there's also the myth out there that's saying that your credit card, or sorry, your cell phone bill isn't going to affect your credit score at all. But it is. You know, they're big companies, and they are gonna, those type of payments are going to go in your credit history to show that your credit score, or sorry, what your history is like with payments. And the sad thing is that's kind of a one-way road. If you miss payments, it's a big, big thing on your credit score. But if you start making payments on time, then it's not going to really affect your credit score in a good way. So it's kind of a shitty one-way road there. It's a little unfair, but it is what it is. Now, like I said before, don't go into overdraft. Bad thing. Overdraft is bad. Just makes you look very irresponsible. Same with missing payments. Both make you look very irresponsible to creditors. And you know, the last thing I'm going to say is apply for credit constantly. I see a lot of people do this, and I tell people not to do it. And that is apply for credit constantly. You know, a lot of people go to, let's say a scenario, go to RBC, apply for a credit card, they decline them, so they're like, screw you. If you're not going to give it to me, I'm going to go to TD. Then they go to TD. Now, RBC has already given you a hit on your score because they've done a credit check on you. Now you're going to go to TD with even a worse credit score because you've got that hit on your score now, and they're probably not going to give you credit either. Now, I'm going to tell you guys the truth. Banks have their own ways of looking at your history. They're not going to just look at your credit score. Banks will have their own system that they put in place for checking people's payments history and credit score, and whether if they give you credit or not. So this is just, like I said, personal experience, but you know, common sense. You're going to get a hit at RBC, so when you go to TD, credit's going to even be worse. Now, a lot of people will go to both, and they'll both say no, so they'll be like, frick, Then they go to a credit union, and the credit union's like, yo, you got two banks that have told you no, and both banks have given you a hit on your credit. So, you know, it's looking bad at this point. So just stop applying for now. Give it a rest. The one thing you can do is a prepaid credit card. Not a prepaid credit card that you get from the stores, but you go to the bank, you put, you know, usually they'll ask for $1,000, you put that down. So it's not really that you're borrowing money, you're just putting that $1,000 on there, and then when you spend it, you got to put it right back on there. And that is just showing creditors your responsibility to being able to pay that off. But it's with your own money, but it's being recorded through the banks. So it's a good way to do it. I really recommend that way. I mean, even if you can put like $2,500 on there and do all your spending on there and just constantly pay that off for the next 6 to 12 months, you're going to see a pretty big increase in your credit score, and that's going to help you. And again, I did that personally, and it really helped. Now, getting on the things that you do want to do, you want to keep your credit card balance below 75% of the credit card limit. So, to make things easy, let's say you have a $10,000 credit card. What you want to do is you never want to go above having $7,500 outstanding on your card. And that's because, again, the irresponsibility. Banks don't like it when you keep a lot of money owing, and I found that keeping it under 75% of the total balance of the card, that really helps. You know, I found that when I kept it a little higher there when I first started, brought my credit score down, and then I kept it between, you know, now I keep it below 50%, but even between 50% and 75%, you're going to be good. Banks don't mind that, but just don't go over the 75%. And then the second thing is ask for a limit increase. Now, there's a flip thing to this. You got to be really responsible for this, and the bank's got to be willing to do it. Now, if you know that there's going to be a payment that's coming up that you're going to have to pay for, I'm going to give you an example. For my construction company, when I first started, when I did my first big job, I knew I was going to have to spend like $10,000, $15,000 on supplies. And I wasn't ready to ask my client to pay up front. I wanted to do it myself. So what I did is, at the time, I only had a $7,500 credit card, and I knew I was going to go above that. So I went to the bank and I said, hey, you know, I've been paying my credit card now for a couple months. I would like a credit increase because we have a project coming up that I'm going to be spending more than what the card has. Now, and the bank gave me an increase. And you know, actually, I'll tell you the truth, they didn't give me the full increase that I was looking for. They only increased it to $10,000, and I had to ask my client for a little bit of an upfront payment, which the client was more than happy to do, but much more happier than if I would have had to ask for the full payment. But the reason that I asked for that is because then I was able to spend $7,500 on materials without going over that 75% of my total card, and keep that in good standing. So, but you have to be responsible and not spend that extra $2,500 or whatever amount that the bank gave you. Leave that extra amount as that safety space where, you know, it keeps the card in a good standing and keeps your history good. And I've told people to do that, and it's helped people such as myself doing that. I kind of learned that myself. So anyways, guys, again, very basics of building your credit score. You know, I've helped myself, I've helped a lot of friends, I've helped family members and all that. So I'm going to go into detail of different parts of building your credit in different videos, but these are the basics. I hope you guys can put these to use with your credit, whether it's personal credit or business credit. Both of these, all of these things can be applied to both of those. So thanks for watching, guys. I hope I'm helping you out. I'm trying to save you guys money. I'm trying to put videos out there that you guys like to watch. So please subscribe, and we'll see you guys in the next video.
Loving the game cause I am developing every day. I'm focused on killing it. Back in the days when I was crazed, living the life of graffiti and felonies.